What's going on, apes? Welcome back to the channel. We have something very important to talk about, and some apes might be helping hedge funds and institutions actually stay in their short positions for a longer period of time without covering due to this one factor we have to talk about. This is very important, so please, if you guys like what was provided to you in this video, this is all going to be facts, no opinions in this video. Hit that like button for me. I do greatly appreciate it, and it helps to spread the word about what is going on with AMC stock. Now, I don't want to waste any time getting into it, guys, so let's first off acknowledge a technical analysis. For anybody that is in doubt after the negative 4.17% day that we did see today, this is actually a great thing that we are not cratering. We actually seen a decent amount of volume for the day as well. We've seen about, 90 million in volume, even yesterday at about 57 million in volume. So overall, I think it was a great day. We were down about 12% at one point today, and then we bounced back up with a hard bounce, up almost 1%, or 1.83%, I should say, in after hours. So we really only went down about 2.2%, if my math is correct there. Don't hold me accountable on that. I'm not a math major, but that is not important here. The technical analysis has nothing to do with this video, but for those of you guys that are in doubt, it is still very bullish. Now, what is the big concern here? And as we do know, there's a lot of activity on the actual option chain, which is a good thing overall. We need this for a gamma squeeze, and we see about 300,000 in contracts that are in the money and out the money on any given expiration day, especially over the next two expiration dates. We have about 150,000 that is for this next upcoming week, and then we have about 305,000 contracts that are expiring June 16th. So we see a lot of options activity, guys, but what is truly alarming here, what I want to bring to you guys' attention, how some apes could be essentially helping the hedge funds and institutions stay in their short positions, really revolves around the option chain, and this is where it gets very important. Now, if you guys are unaware of how the option market works, when you buy a call, somebody is selling you that call, right? If you have 100 shares of a stock, you could sell a covered call, is what it's called. Agree to sell your shares at whatever strike you want. You collect this price. Let's say the $100 strike, you would collect $124. If AMC closed above $100 by July 16th, you would be forced to sell your 100 shares at $100 per share. Now, there is not always an actual person like me or you that is selling that covered call. So that is where market makers come into this situation. And as we do know, Citadel is a market maker, but there's plenty of other market makers. Hedge funds can even act as market makers as well. And essentially, same thing that would happen when it's somebody else on there, right? When you sell a cover call, the same thing is happening with the hedge funds and institutions. They are collecting this price that you are paying for the call. They agree to sell you 100 shares at whatever strike this is. Let's just use the $100 strike for an example here. Now, they would collect $124. Now, if AMC is not at $100 or over $100 by July 16th, this would expire worthless. The market makers would keep all of that money that you essentially put up for those options contracts. Now, this is where it is key, because at this point, we do see a lot of activity as far as open interest that are at these further dated options, these 100 to really 145, and a ton of open interest at the 145 on every single option chain that you do see. And this is not where it was a couple weeks ago when we started to short squeeze. We're actually seeing this be going crazy, right? Every single day we're seeing this open interest go nuts on specifically the 145 options. So we are giving the hedge funds, institutions, all this money, and in the meantime, they are not hedging their positions. They don't think AMC stock is going to go to $145 or even $100 or even probably $90 by these expiration dates. So they are not hedging by buying shares. So we are not effectively helping with the gamma squeeze. We are essentially giving them our money, and they are not doing anything with it but holding these contracts. And that's where you do get the actual gamma squeeze and delta hedging that goes into effect, because let's just use the $100 strike for an example. Yet again, if you bought this for $100, they have to sell you 100 shares at $100. They're not going to be buying the stock at $52 since you are so far away from this, and definitely not at the 145, but I'm 100% confident neither at the $100 strike or even in the $90 range as well. Now, the only way the hedge funds and institutions would actually lose on these trades is if AMC literally opened up about $100 or went to $100 very fast and they weren't able to buy the shares to cover their short positions. But that's where you see the delta hedging and the gamma squeeze that goes into effect. If you have the $100 strikes and they sold them to you, right, agree to sell you 100 shares at this strike price, this $100 strike price, they're going to start buying shares at about that $95 price, even $90. And then in that case, if they bought 100 shares at $90, they agree to sell you them at $100, they would make $1,000 per options contract. That is why you do see gamma squeezes and you see delta hedging that is going on. This is a casino down to its core, right? You're gambling if a stock is going to go up or down. Now there's strategies that isn't necessarily gambling, but when you're buying these contracts, you are gambling. And what do you know about gambling and casinos? The house always wins. So this is not financial advice. Do whatever you guys want to do. Truly, I don't care what you do. I just don't want to see so many people losing all this money while the hedge funds and specifically Citadel is over here getting rich off of you guys. That's really what it comes down to. Now, in my personal non-financial advisor opinion here, if you wanted to do something like this, yes, it would cost you a little bit more money to get, let's say, a $60 call, but I mean, it would cost you about $400, so that's significantly more than $145, which would cost you $80. But this is way less risky for one, and the closer we get to 60, you will actually see buying going on from these hedge funds. That is just a simple case here because they are not going to lose money, so they have to buy the shares if they are selling you these calls. And this is 100% how it works. That is why there is market makers, so you can always buy a call if you wanted to. That's where you see if a stock starts to rally and go crazy, there's a news event that comes out. If there is not somebody there to sell you a cover call, you might see the options go to $500 real quick. That is because the market makers are setting those prices so they don't lose on the contracts. That is the simple fact here. Market makers, they don't lose, or they rarely ever lose. Specifically on AMC, when you have options that are valued so highly and so far out the money that these options are, like I said, they're not hedging for these options. You're not helping the gamma squeeze. You're essentially giving your money away for free. Now, if you have a strategy to day trade these on green days, do whatever you want to do. Literally, I'm not trying to tell you what to do. That strategy can work, and I do that myself. We do that in the buy and sell alerts. If you guys want to be notified every single time a trade is made and actually start winning on your trades, check that out. Link down below in the description. It is very inexpensive and it pays for itself. But that is the overall gist here. I don't want to drag this video out for too much longer, but I would get closer to the money options because you will effectively be helping the whole movement here, and specifically with the gamma squeeze, because as we all know, you need the shorts to cover. You need a gamma squeeze, like Volkswagen back in, I believe, 2008, whenever it was. I'm not familiar off top what year it was, but you only seen about a 10% short interest, but you've seen a lot of options activity. So that is a key here. You need the gamma squeeze, and that is why, quite frankly, this is not a prediction or anything. I think the most likely and a time frame to actually see a gamma squeeze is going to be July 16th. But like I said, that is not financial advice by any means necessary. Don't buy these options if you can't afford to lose this money. But that is what I am looking at, guys. If we had just all these options placed closer to the money, you would be seeing some kind of gamma squeeze effect that is going on with the stock. Now, I want to get this information out to you guys as soon as possible. It is pretty late right now when I'm filming this. It's actually 11:37 p.m. so I do apologize if I stutter around, mumbled a couple times throughout this video. Like I said, I was just trying to get this to you as fast as possible. So hopefully a lot of you guys can see this and actually start changing some of the behaviors that we do see on the options chain. Now, I'm not calling anybody out. Like I said, do whatever you want to do. But that is going to conclude this video. If you guys want to stay up to date with all the moves we're making, like I said, buy and sell alerts linked in the description, as well as if you guys want to get free stock using the link for public, no deposit necessary, no need to even link a bank account, and you get your free stock immediately. Doesn't even matter if it's the 4th of July. You get your free stock in about 3 minutes time, as well as check out the link down below for Webull. Deposit $100, get 4 free stocks, each of them potentially worth up to $2,400 a piece. Now, also, let me know down below in the comment section what you guys think about this information, because it's all factual, so we don't really have to debate any of that. This is all factual information, but let me know if you think this is having a big impact on why some of the shorts are able to stay in their short positions so long. Also, also let me know what you guys are doing for the 4th of July weekend. I love to hear from you guys and pretty much respond to every single comment, as well as let me know if there's any option trading strategy videos you want or investing videos in specific. Let me know, like each other's comments, so I know exactly what you guys want to see. But with that being said, I will see you guys in the next video.